Hi everyone, and welcome back. Before we dive into Tuesday's pre-market setup for Opendoor, I want to highlight something important, something I predicted. I said that if the company postponed or cancelled its reverse stock split vote, it would be the strongest signal possible that the board had confidence in the current price action. And now, that's exactly what they've done. Opendoor has officially postponed the vote on its proposed reverse stock split. More importantly, they made it clear that they do not intend to proceed unless absolutely necessary. That isn't just a procedural delay. It's a message, a quiet but clear vote of confidence from management that they believe the current valuation is sustainable without artificial inflation through a split. Let's unpack what this means and why it could set the stage for a second wave of bullish momentum, or even a short squeeze attempt, as early as today. Now first, let's talk about Monday's session. The stock dropped about 7% during the trading day, closing around $2.43. But here's the key, aftermarket trading was flat. There was no panic, no further selling pressure. That's a sign that the market is still processing this vote delay and what it means. Often, flat after-hours price action signals that traders are on pause, waiting to see how the next session opens. The real story though isn't the drop, it's why the vote delay matters. Reverse stock splits are usually defensive moves. They help a company avoid delisting by lifting the share price. But they can also shake investor confidence. So when the board says we'll only use this if we absolutely have to, it shows they believe in the rally that's already taken place. It shows they think the share price can continue to hold, or grow, organically. For short sellers, this is a problem. A reverse split can act like a reset, it reduces float, changes dynamics, and often gives shorts a bit of breathing room. Delaying the vote removes that reset button. If you're holding a short position, this just became a more uncomfortable trade. Now let's talk support and resistance. The stock has bounced multiple times around the $2.20 to $2.40 range. That level is still holding. On the upside, $2.70 remains the near-term resistance. If bulls can break through that, the next target is likely the psychological level of $3. Volume and RSI are no longer overextended. If momentum returns, the setup technically looks healthy for another leg up. But let's be clear, today isn't just about price levels. It's about sentiment. Retail traders are watching this closely. Many saw the vote delay as a green light. And when you combine elevated short interest, strong support, and a tactical move from the board like this, you start to get the conditions that can fuel a short squeeze, or at least a sharp upward push. Now, what's next? If this rally is going to be sustained, or even extended, the next major scheduled catalyst appears to be earnings in August. If the company can show continued improvements in efficiency, margins, or market share, even in a tough housing market, then that could support a higher valuation. But between now and then, price action may be driven by sentiment, volume, and how shorts respond to this latest move from the board. So as we head into Tuesday's trading session, here's what to watch. Does the stock hold above that key support zone between 220 and 240? Does early volume favor the bulls? And will we see a shift in short-term sentiment now that the reverse split has been pulled off the table, for now? Personally, I think the board just gave the strongest signal yet that they're willing to let the market do its thing. And that opens the door, pun intended, for traders to make their move. Let me know in the comments, are you buying, holding, or waiting for confirmation? As always, thanks for tuning in. If you found this video helpful, make sure to like, subscribe, and hit the bell so you don't miss any updates.